Good evening, good afternoon, good morning, depending on where you are in this world. This is Hedgen Lee with a evening update with Bitcoin. So before we jump into Bitcoin, I just want to take you through some of maybe the commonality in some of the charts that I've been putting up and kind of give you maybe a sentiment-based explanation as to why. So I just did an analysis with Pay, 10x Pay. And if you just take the overall pattern, you'll see a symmetrical triangle. You'll see the clear indications of the hurry up and wait pattern. Here's Bancor. Very similar looking symmetrical triangle, except in this case it is an ABCDE. By the way, Bancor should be making a move very soon. It may not yet break out, might have a couple more days, but the pattern between Bancor, 10x Pay, it isn't that too different. And we all know this, BitShares, similar. Symmetrical triangle. Here is an extended fifth. An extended fifth here for 10x. Very similar patterns. Here's a zoomed out view of BitShares, but we're showing that extended fifth here as well. So triangle extended fifth. ABC or ABCDE. Very common. Here's ICN. During the hurry up and wait as well. Put in the impulse 5 waves without wasting any time. ABC. It's just about done. And the infamous Bitcoin Cash had this huge triangle going. Got a lot of people frustrated for a while. And look, it's starting to get broke out. So amongst all of these triangle charts, Bitcoin Cash has been the first one to bust out. So if we go back here, I think it's just about done for 10x. It's going to bust out as well. It's going to breach out and beyond and above this white line. For Bancor, same thing's going to happen. We're not going to see Bancor at 2 or under 2 for very long at all. A few more days at most. But anytime they could bust out. For Bancor, the apex, the point where the two lines of the triangle cross, intersect, the closer the price comes to the apex, the more agitated it gets and pent up in its desire to bust out of this triangle. So there is a term in a analysis, for a technical analysis, and that is called all the same market. And what that means is that sentiment is pretty uniform. I'm sure that even in the stock market you quite often see maybe the Dow and the S&P and the NASDAQ almost moving in a very correlated fashion. And that's because sentiment is pretty uniform across the markets. Now, from that perspective, it's really no different for the cryptos, and that sentiment is pretty uniform across all of the altcoins. And as a result of the uniformity of that sentiment, you get very similar patterns across the board almost. And that uniformity of the patterns that you're seeing here and the similarity index of the patterns is very high. It's because of the uniformity of the sentiment. Now, Usually symmetrical triangles represent a period of consolidation with a certain level of uncertainty as to whether it's going to go up or down. But Elliott, that's from a pattern perspective, is hard to tell. But that's why I combine Elliott waves and chart pattern to decipher those types of conundrums, because just the pattern itself, you don't know whether it'll go up or not. But when you use Elliott waves, for example, in this case A, B, C, D, E, when the E is in the bottom of the supporting line, then the greater tendencies for the price to break out and above, and therefore Elliott waves helps to resolve such types of confounding issues that just pattern alone could have. Now here's the same thing. We also know that with an extended fifth, you have a huge, very deep retracement. And my goodness, for BitShares, this has been very deep. Okay, probably 90+%. But again, the similarity index in the pattern, as with regards to the triangle here, shows up, and in a very similar timing as well across the time. And they all happen after a 5-wave hurry-up sequence. Same thing with the ICN hurry-up sequence. Now the similarity of the sentiment across the board, all the same market is giving, again, a very similar chart pattern, a very similar Elliott wave count. And these are not accidents. It happens because of the uniformity of sentiment. So I'm sure that some of you have been considering this. You might be thinking, boy, every chart that Hedging puts out is a bullish chart with a 300%, 400%, 100 whatever percent, or 21-fold. It's not something that I'm making up. It's because I'm reading the charts and I'm seeing myself. When I'm seeing that kind of consistent bullish calls on the altcoins, I realize, and I know why, from a sentiment perspective, it's all the same market basically. Sentiment is pretty uniform across the board, and as a result, remember, price is nothing but the reflection of sentiment. And that means if sentiment is pretty uniform, then so will the price, and as a result, so will the pattern, and so will the Elliott wave count be pretty similar. So the similarity index, if it is high at the level of sentiment, it'll be high at the level of price, and that similarity index in Elliott wave count will be high, and the similarity index in the chart pattern will be high. So I just wanted to take you through that, because I'm sure some of you might be scratching your heads thinking that I am uber, or rather perma-bull on the altcoins. Not necessarily. I'm just trying to see that the sentiment is driving all of these similarity indexes. Okay, so back to Bitcoin. We're looking at the 1-hour chart, and these are the labels and markings that we had from earlier this morning. I had pointed out this smaller bull flag, as well as the other larger fractals of it. Sure enough, prices did break out of that bull flag. And then I'm making another one right here. And it broke out of that too. Now it's doing a downward pointing triangle, which is nothing but a consolidation, and this is going to go higher, I think. We're going to see maybe a higher high. This is interesting because this then will have 1, 2, 3, 4, 5. Okay, so it either already has a 5. Let me get rid of these flag markings so you can see it better. So It has either already 5 waves, but I don't think so. I think this is 1, 2, 3, 4, and we're going to see a 5. So if we go back a little bit, this is wave 1, 2, and then we're going to go to 3. Either this will be a 3 here, or this 5 will get stretched. This is going near vertical here. It might go near vertical as well. It might get stretched, extended, so that now this becomes 3. Let's get rid of some of these lines here as well. So that this will approach 666.2. Now if this is a 5, 1, 2, 3, 4, and 5, then it'll correct. But let's see how this plays out. This will be the updated count. The only thing that concerns me here then is moving really fast. Wondering how much more time it'll give the altcoins to do their bull runs. But let's see what happens. Okay. Now there's another thing that I wanted to bring to your attention that I had been thinking about. And I'm going to switch gears a little bit here. So here's a PowerPoint. This is that of the industrials, Dow Jones Industrials. And this is a since 2008-9 financial crisis bottom to present day. There was a guy who was calling the top here. Didn't happen. Called the top here. Well, he was calling the top here. Then changed his top call to here. And when he was coming down, I was like, oh, look, I called that. I used my Elliott waves, Fibonacci's. Now we're going to go to Dow 400. This is just a temporary reprieve. And he used a lot of deep Elliott wave analysis too. He also pointed out this head and shoulders pattern here. And just it said this is going to go, we're going to go see a lower low, lower than what we saw on the bottom of the 2009, March of 2009. Didn't work, but still stayed bearish. And in around 2011, when it was turning down again, he said, oh, this is for real. Now we're going to see a real downturn, and we're going to see this low break. And it didn't. And this is around where QE1, QE2, and 3 were happening. But he still stayed bearish. And he said by 2016, we're going to see Dow 400 and S&P 40 or 50. Meanwhile, Dow was just making orgasmic lunges upwards. Even here, he remained bearish. And when I saw him going through this, I learned a big lesson. You cannot be so inflexible because it'll kill you. It'll destroy your profits that you might have been made on the downside by staying bearish throughout, calling for a, what did he call it, when he was calling for what's called the super cycle, tens of years to grand super cycle at the level of century tops, that is, which is just one of the biggest tops you can fathom. It means that civilization will be destroyed if it crashes from there, let's say. I'm exaggerating, but in watching this guy just get burnt after every call, whenever there was a peak, he called it, didn't work here, got burnt. And they even came up with, used his last name to come up with exactly that, where you remain inflexible, in this case, remain bearish, bearish, and get burned every time by the market, by a bull market. Now, here, I'm more interested in here. I don't really follow him anymore, but I learned a big lesson. And that lesson was, don't remain inflexible, be willing to change. But more importantly, the bottom line lesson is you follow the trend. The trend is your friend. If you go against your friend, if you go against the trend, you're dead. Now, I want to point out here, this top line trend, prices have been trending within this channel. And the number of bears that came out here also, it was not even funny. They were trying to call, oh, we're going to see the Dow 500 again. Well, didn't happen. And now prices have busted out of this. And usually, if you look back to the .com bubble, prices busted out of this as well, out of the channel. And when a price busts out decisively and stays out, and is not goes out and comes right back in, which would be a bearish wick. But in this case, for the Dow, it just on Friday, the move was massive and stays there. That's a different story. If you recall, I've been saying if prices bust out of this decisively and stays above and gives no tendency of wanting to come back down, it's a different story. So here, at least for the Dow, it's a different story. But let's draw some lines. Because I was drawing some lines here. And I'm going to make this red, just so you can see it, and thick. Let's make it black. Oh, God. Now look at the pattern. We're looking at the wedge, an upward pointing wedge. I can count here 1, 2, 3, 4, 5 as well. And poof, it just busted through there. Like hot knife through butter. And it's staying up there. It's not showing any tendency of wanting to come back down. So that's a different story. It can negate this pattern is what I'm trying to say. It can negate it. And look how vertical this looks. If you remember the .com bubble, the very end of a bubble goes vertical. Just, I don't know exactly how long it'll last. And if you go back here, if this goes vertical, if this goes poof like this, this is not a bullish, bearish wick. This is called a top, a bubble that is a blow off top, sorry. It's like blowing off top, and it'll go near vertical. And usually in this kind of situation, you don't get just 10, 15, 20, 30%. You get a double. So what are we, 6, we'll go to 12. And it goes near vertical. And the wave 5 in that case will be extended. It's like if you've ever seen a can. I used to do chemistry experiments and have some flour, dry flour in a can, and you would aerate it and then ignite a flint, and it'll just blow up the can. And the top of the can is open, has an opening. Has a cover, and the cover would just blow off straight up into the air. And that's almost the effect here. And if this becomes more probable, then you want to stay in for this and catch it and profit from it. Then you want to catch and profit from this. And I'm mentioning this because I learned a valuable lesson from watching that fellow, who, by the way, is the author of that book, Elliott Wave Principles, Robert Proctor. Just get creamed after each and every peak because of his lack of and unwillingness to see it in any other way except his own myopic viewpoint. And here is a similar pattern in the industrials and in the S&P. Similarity index is high in sentiment with the equities as well. Getting this blow off. And this could mean, I could see Dow 40,000. Which would be fantastic for your retirement accounts to be fully invested. And here I will not, I've been calling this, I've been calling for caution, I still am. That is still my primary account. But I will not be myopic and closed off from any other probabilities, which is something like this. What will give greater credence of this happening? Blow-off topping. Once this upper white line of the triangle is pierced, and you see prices just going to your vertical, and not buy just. If it's a bearish wick, you see maybe 200, 300, 500 points and comes right back down. But once you start passing 7,200, that's not a bearish wick. That's a blow-off topping process. Or even at 6,800 or so. Once it blows past 6,800, you stay where you are and sell here. I hope what I'm saying is making sense. Now, what happens after that? Well, this is a blow-off topping of a bubble. Then you see this. This is a real last final hurrah. And it negates this pattern. But it does not negate the elite wave count, because wave 5 just gets extended. So what I'm going to do is keep a real close eye on what happens within the 6,800 zone to 7,200 zone. If the vigor of the price rise is almost just orgasmic lunges upward, near vertical, then you got a different story. Yeah, this blow-off top story. And it could take a little while too, to maybe into December, I don't know. One of the most difficult things about time, to project on the length of the time, is very difficult. But we know one thing for sure: the hurry up and wait syndrome. Whenever there's a 5 wave, it's going to happen in no time. Whenever there's a correction, it's going to take its freaking time forever. For bitches, if it's going to go to, let's say, $1, and it goes that to that $1 stage in an impulse, it's not going to waste any time. We can do it in a month or less, or 2 months. Can go near vertical. So my current thought behind all of this is that while Bitcoin is blowing off its top, all of the altcoins crouching, getting ready to pounce and jump along with Bitcoin. This will be a massive phasic bull run in phase with Bitcoin. While the altcoins have not been rising exactly like Bitcoin had been, rather it's been biding its time. It's like a cat. I have two cats. When they're ready to pounce, they crouch and then they wiggle their butts ready to pounce. And they take their time. And all the altcoins, so I think, have been in that getting ready phase to do their part of this near vertical rise. What does that mean? Look, same thing here. Bancor's been waiting, crouching, just compressing its vigor to jump. Not to 9, but let's say a lot more than that. But when it goes near vertical like this, when sentiment turns uber bullish, there's nothing that'll stop it. With EOS, even 2 million coins a month won't be able to stop it. I couldn't care less how, even if it was 4 million coins a month. Nothing can drive sentiment more than sentiment itself. And nothing can stop it except sentiment itself. Not the fundamentals. Here too, BitShares. It'll go near vertical. It's waiting. It's crouching. It's got a very high index in the similarity of pattern, wave count, and sentiment. And once this happens, it'll be a sight to behold on the bullish side. And on a longer term perspective, my God, it could be a different story. I see it is crouching, waiting for this. It's just a matter of time. And on the side of Bitcoin, I think that flint trigger will be once it decisively breaks past this upper line of resistance. So let's keep a close eye on this from now to 6,800 to 7,200. I'll probably know even before that just by looking at the vigor of its rise. It's not going to be one of those sharp rise and dump. If that's not what it's going to be, then that's how bearish wicks happen. But if it rises with strength and then starts going vertical because of all the FOMOs gets caught up, we could look at something like this as well. I don't know. But I do know this could go from possible to probable. And I think in the stock market too, we're going to see the similar blow off of the top. In the dot-com era, I think it lasted, 6 months? The blow off top lasted 6 whole months. And usually after October has been pretty seasonally weak, but usually after October and into December and the New Year's. So November, December, January, that's 3 months at least. February, March. April time frame. That makes perfect cycle sense. Because May, they sell in May and go away, right? So May might be the time, or April, when it tops and it just starts turning and crashing. And that's when you jump back into bonds and into gold. I don't think now is the time to buy the gold. I think now it's time to divert more into the equities. And from an allocation point of view, what I have been doing is diverting more of my bond allocation into equity allocation. I've done that a long time, 6 weeks ago. And in one of my blogs, I did indicate the possibility of this, and I think it's now very probable in equities. So I wanted to just share that viewpoint with you, that I am not going to be an inflexible, myopic technical analyst. I've learned my lessons. A lot of times you can learn lessons from personal experience, but also from watching others going through a slow train wreck. And if indicators, signals, price actions, price personalities call for me to change my views, damn, I don't have any issues changing my views. That's what a good technical analyst does. They go with the trend. They go with the flow. They try to figure out what the trend is. If the trend is going to be this, I'm going to go with that flow. If you fight the trend, you're going to be destroyed. And from a short-term perspective, it may reflect that as well. I mean, here you're seeing a vertical move here as well. So I think some exciting days might be ahead of us.